Good morning, everybody. All right, let's see where things are at here. Let's do our factory work. So I'm whipping around here this morning up near the high of the day, and we've reached the top of the resistance area. So a deep retracement. And yesterday we started the day with an inside bar, right? Like, which way is it going to go? Which way is it going to go? And is it going to break below yesterday's low? Is it going to get above the high? And so on. And so part of, we talked about in the green room when I titled YouTube this morning about expectations and reality check. So, yesterday, the day before yesterday, the bar was suggesting lower prices because prices got rejected, from that area. So it wasn't going to, be far for it to break below that, even with the gap up, and that didn't happen. So part of that is, this move up versus that area of resistance. Of course, there's going to be sellers there. But now, based on what's over here, the most immediate price action, traders, institutions are looking to buy the pullback with expectations that it could go higher, right? That's normal. As it was here, it looked like it could pull back further and it didn't. And then yesterday, it looked like it could pull back further, maybe to this minor support 400 area, and it didn't. So what happens at that point? Well, decision has to be made. If you really think it's going to go higher and it doesn't pull back, that means rather than being a passive buyer, buying a pullback, maybe bidding for it, you have to become an active buyer. And that's what happened yesterday. Institutions had to become active buyers because there's always that fear of being left behind. And so now we've got this range expansion bar into resistance. And so just based on yesterday's price action, the expectation, just based on here, well, if I bought here, well, my expectation is going to go higher. Well, 4,200, 420 would be an obvious place. Question is, can it get through here? Well, the depth of retracement suggests yes. The lack of follow through to that little minor topping tail and that larger one suggests yes. So now we're going to see, can it actually do that? And can it get through that resistance, and then by how much? One of the concepts, and I wrote about it in the weekend letter, was the concept of a greater than 100% retracement. And what is that? Well, when a move starts from, say, the bottom of the range, or even breaking out, it typically ends short term after it retraces more than 100%. It pushes up above the high. Maybe there's some last, holdout stops, and that's where it typically reverses from. So we start this day near the high, and it got up to 416-ish, just slightly above yesterday's high, right up there, and now it's stalled. Really not a big deal. So going sideways at resistance is bullish, and it's just starting to do that. So we really don't know yet whether it'll push through it today. But just keep in mind, yesterday you can see the run on the 15-minute chart as institutions realized, I'm not getting the pullback. It isn't going down under these lows here. Remember, we talked about this breaking down here, would enter the void and it could come down to 400. So now, your expectations are dashed. And so what are you going to do? Sideline, I'm not paying up, or jump on board and, expectation is going to continue. So that's the expectation today. This should continue. Of course, it could be an inside day. It could do a lot of things. What it shouldn't do is break down under yesterday's low because it was a range expansion green bar. So it shouldn't break down. Part of what I said yesterday was the most shocking thing would be if it gapped below that bar today. Clearly, that's not happening. Well, we've got 20 minutes to go, but, it shouldn't happen just based on what's going on here this morning. But anyway, that is a significant line in the sand now down here, obviously. And we've got this resistance area up here. And McGraw is sharing with me, buyers should show up at 41.50. Okay. I'm sure there's some big open interest there. And that's, I guess, minor support. And that's the bottom of the little range there on the hourly chart. So that isn't very far of a pullback. So they're going to have to be really bullish. Look, anytime there's pivots to the left, there's going to be buyers there. You can count your life on it. What you can't count your life on is how many and will they actually hold it. So while I totally agree with McGraw saying, we don't know how many or whether they can hold it there. But if they don't, it opens up into the void below. And wide range bars are momentum moves in a smaller time frame. And there you have the example of what is part of the course when we teach about price action. And our courses don't teach about using indicators. They teach about using price action in the proper way. So all of this at this point doesn't matter anymore. Prices slice through it. And these highs like it wasn't there, which is extremely bullish. One of the things that we say is that the wide range bar is the weakest link in the chart, even though it's a power bar, because it has to create support such as this, which it's doing. And once it creates that support, it shouldn't break down below it. So that's the expectation of what's happening here. Bullish price action, it creates a pivot. So at this point, does it pull back somewhere in here? Fib traders or trend line traders or whatever you call them, they buy some pullback to subjective reference point. And then they buy the pullback and it goes higher. So now once it creates a pivot, we have something to look to the left to for buyers to show up. There it is. They do that. There's a pivot here. Expectation, it goes through it. It breaks below here. People hit the bid because that's where the stops are. And all the algos know it. So let's see where this ends the day. It shouldn't close down into here, although it might because it's at resistance. Let's see if it can get above 4,200, right? So SPX. With this in mind, 4,200, right away, option traders are going to buy calls, right? And that's where the open interest is going to increase, and you can see it, right? Here's the open interest. This is what it was yesterday, right? So it doubled, more than doubled. So that'll provide some resistance, but it could get through that. And there would be a bit of a run to get through there, especially after yesterday. So McGraw is sharing with me 42.20, which is what I was looking at. It doesn't have the premium that it had, but that's far enough away. 15, we're going for less because we want to be safe. But if the markets pop at the open, this should be fine. Oh, sorry, Jacob. I got confused with two of you guys. Yeah. So 42.20-ish is not, there's not a lot there, really not enough. But if it pops up, that's what we want to see. Does it pop up? Do we get that buying at the open to get that premium enough for that to make sense? Now, down below, it shouldn't go below, right? 40.80. And that's what Jacob has, 40.80. And so as we look at that, 40.80, we got to go down. 40.80. So that's nice, 70 by 85, even a little below what I always like go on the other side of it. And so there's this balancing act between, does the market move up? Does the market move down versus the time decay? Because even though it moves down, if it happens later in the day, well, that premium may not be there. So that this is attractive, down there, and it is pretty darn far. And you got yesterday's low as a reference point, which is the bottom of that bar right there. So really kind of tight compared to what it had been in the past, but those are the levels that make sense today. Excuse me. All right. And Qs have been leading the way up. They're up here, up a little bit above the high. And see this topping tail right there? So here's a little heads up. this may not look like much, but that topping tail, especially when there's a bar next to it, is going to be some congestion in a lower time frame. And so you can see that up here, right, is right there, that little congestion area. And that would be the target area, assuming this momentum continues. And that's where the sellers are going to be, up there. Just look to the left. This is what we do, common sense. All right, YM, it's been the laggard, but it reversed the prior day's down bar. Right, so expectations were lower based on the big red bar. It didn't follow through. Up it goes, and we've got a bullish 180, really close. Bullish 180s are best after pullbacks, of course, because they got room to run. But from an intraday point of view, that's a decent amount of room to run to get to the top of the June resistance area there. But Qs have been, and tech has been in favor, especially semiconductors. So why bother with this laggard unless the Qs already reached their resistance area, and then this can play some catch up. Russell up at the top of that resistance area, being rejected a little bit, but not breaking any support yet. But you can see as soon as it took out the highs, sellers showed up again. Kind of really does make sense getting, to that area there. Now, Bitcoin hasn't participated here. And that's, while bullish price action has been the case, this somewhat detachment between Bitcoin and the equity markets has to give you a little, what's the hell's going on here? But the way this is pulling back, it's this kind of I don't know, sometimes we call it a hook, buy setup, whatever. A lot of times it does result in a move up, but so far that hasn't happened. And yesterday, was this green bar, and now it's inching lower, which is okay, as long as it does flip up from here. So you want to keep an eye on this, or one of these Bitcoin stocks, that whether this actually breaks below these levels here, especially with the equity markets up at that resistance area. So this laggard may actually just start to move lower here. And it could be just your heads up that while the equity markets do look like they can go higher, this could throw a wrench in that. So we look at these intermarket relationships, to help guide us. Okay. And oil, right? So this has been one of the things that the market has liked because of the inflation thing, right? Oil's coming down, so less inflation. The Fed won't have to do whatever. We shall see, so inflation's still whatever the number was, 8%, whatever numbers we get as we go forward, let's see. But, where the Fed is right now, it's not like they're not going to be doing anything. Also, keep an eye. I mentioned this in the newsletter, something else. This was moving down. Every time it's come down around this 20 area, the markets have topped out this year. So just set an alert. You don't have to watch it. As an intraday trader, it is helpful to watch which way this is trending during the trading day. You don't have to look at it like candlesticks. Just a line chart will do on a 5-minute chart. See which way it's trending and whether it reaches resistance or support. And silver, you always look at here. They're really not doing anything, kind of selling off, which means, the dollar must be inching up. It is, and rejecting, kind of flip-flopping here. And, gold holding up okay. Yesterday I'm laughing because I saw a commercial, these commercials that come on trying to entice people to invest in gold and silver. And, those commercials about gold, way back here, buy gold, buy gold, buy gold. And so yesterday's was about silver and how silver has to be used for energy. And, now silver's cheap. Well, that might be the relatively cheap to where it was, back here at the beginning of the year, but they are promoting, the gold and silver, no matter what it's doing. They just change the reasonings for it. But That's why you got to be careful, not just listen to the marketing. That's just gold and silver. There's plenty of marketers out there selling indicators of the day and whatever. Transports did okay yesterday, but we got the same story up at the top of the range. So any which way we look at it, whether it's at resistance, whether it takes it out, risk for longs is increasing. The good part is in the short term, at least there was this correction bar. So that helps a bit, but it also becomes a really important line in the sand that should not be violated, and especially just, the prior day's high when we see, more so we see here on the SPY, that's a range expansion bar right into this resistance area. So that's it. We'll see, how things progress and when the next correction starts. One thing I saw is finally, and there's some room to get there, but finally, option traders are starting to really believe in this move up, and they're starting to buy more call options. And this hasn't hit the upper bands, but it's moving in the direction now that, the stars are lining up for some kind of correction as we come in. I mentioned yesterday that August at times has been a low point where things rally into the September area. That's the worst month of the year. And sometimes August is a high point. So this year it appears that it could be a high point. And the timing of it will be told by a price pattern, but it's not unusual for it to happen in the middle of the month, which we've got time to go. So we'll see how it unfolds. It's day to day. So far, markets are holding up. We got some bullish price action. Market internals are starting to line up. And so, look, when they are lined up, we'll know it when we know it. Yeah, Ross telling me lots of upside call buying up and out in time. All right. So, institutions, traders looking for the home run, like this thing's going to blast off to 430 and they're going to get the windfall. Maybe they will, but close below today's low and, the sentiment will change. All yours, Dan.
Good morning. All right, all our opens are fine. Any questions, just ask. I just posted an alert. We shorted puts on coin yesterday, and I don't know what's going on, but look at that thing. It's rallied $15 pre-market. So I'm going to be looking to take my profit on that. I did a couple of these naked puts or spreads on earnings like I've been doing. They're all great. This LSID's gapping against me, but I did the 17.5 for Friday, and I'll bet I still have an open profit at the open. I'll be watching that. That's the only one I got to keep an eye on. A couple new trades here. Here, if you came in late, I'll give you this list again. I've been doing during earnings season in particular. So call and put list plus a big core long list of all bottoming patterns. Look at these two I just added today. We totally missed right yesterday. Look at that. Yeah, even little dunking. Look at that. This is the time to get in these things for bottoming patterns. Well, I'll be looking at the daily for the entry. But new trades here. Can someone verify Crocs was pre-market, not post? I mean, I'm 90% sure it's pre-market based on the action, but that's a nasty gap under a Climo. So that would be a call. All right, thanks, Thane. That's a call spread idea. Clorox call spread idea. Expedia, I'm in. I did the $90 puts for Friday. So it's down a little bit, but I'm sure I'm going to be fine. it's 104.50 and $15 lower. And if this were to come back and negate the gap and take out yesterday's high, it's on my directional list. C's, I shorted puts. I shorted the 40s, $40 puts way down there. I can't see where the gap is, but I'll watch it. And then LNC, I posted as a new trade. It's earnings. I can't see the gap. So it might get destroyed, but over yesterday's highs, good to go. Firm. Thomas. Yeah. Another bottoming pattern. I'll put it on my core watch list. Looks very similar to a lot of these other bottoming ones. So yeah, going on the list. Oh, okay. So now it's gapping down. I like this pattern as a directional over yesterday's high, but yeah, now the gap's messing it up. W Whiskey I have as a core watch. Look at that monthly, all the way back down to the Corona low when people started buying expensive sofas, sitting at home with their Biden paycheck. So it's a bearish gap, but I have an interest in it longer term. So let's see how it sets up. I got Crocs in my other window, so I'll put W here. This thing gapping up has earnings tomorrow. And what is this thing even do? Atlas Air Worldwide. What on earth is making this so strong? But look at the volume. This is what we call a climactic sell setup. So regardless of where it opens tomorrow, I will be looking to short this and like an out of the money call spread. And yeah, some things are perking. Things are perking in that space. I got us into 2 trades yesterday. Block and Riot. Riot's doing nothing, so it's more of the exchanges, it looks like. Coin and Hood. Hood, as you know, was on my core list, and I just missed it yesterday. Just because I had too many things to look at, but look at that weekly. Sky West, I just saw going by the ticker. This is much stronger than Jets. So this is a candidate. Sell out of the money 22.5 put. Here's Jets. Still bottoming though. Didn't want to go down anymore. Let's keep an eye on beat up cruise ships. Wow, coin is still going. All right, so cruise ships. This is not a core setup to me. It's just a bottoming pattern with a big target, maybe $45. Cuervo Gold had a bullish close, but now it's a bearish gap. So that's actually a call spread candidate. Mealy, that's a beautiful bottoming pattern. Gap's too big. Gapping almost to 1,000. 30-minute low though, that would be a call spread for tomorrow if the rest of the checklist matches. Here, FSLI. I'll put this on the core watch list. FSLI, let's add it to a list of the other junk. What about Zoom? Zoom, yeah, Zoom and TDoc. TDoc's weaker, but let me put Zoom on that list. DXC gapping down, call spread wide, so I'm gonna need some help here at the open. You know, kind of favoring more call spreads today with the toppy market. This one's gapping up. Nothing to do. I don't know, I got too much to watch, so I'm just gonna start weeding out some things. ANSS, it's too extended near prior high. ALSN, call spread idea. This is what we call a wide range ending bar. And Greg was talking about a pre-market greater than 100% retracement and a bearish gap down into it. That would have been a good call spread the day of the gap down. IR getting extended. This would be a good short under yesterday's low. I can't see a gap, but if it is gapping a bearish gap, then that would be a short-term turn. Albemarle gapping up over a red bar, 30-minute high, put spread, tandem, gapping down. So that's a shock. That's a breakout failure. That'd be a call spread idea. MKC. I can't see a gap. Big bottoming pattern. We'll come back to you. Berman, bullish trading range and an uptrend. I like that. I'll set an alarm on that. BMRN. Whiskey Uniform over yesterday's high. Target 200. Varoom gapping up, put spread, nice uptrend, big trading range, broke out, pull back. So that Varoom, maybe 5-minute high. McGraw, I don't know if you did C's with me. That's our $40 puts looking good. All right, this LCID. All right, I'm gonna bid to get out break even. I'm flat right now. I'm totally flat, even though it went way against me. All right, out. So I'm out at a small profit actually. I made a 3 cent gain on that thing going against me. So Greg, there's another example. Some things did go against me and I got out unscathed. I had this in all 3 accounts. I'm just getting out at a small gain.
It's been working well, Dan. By the way, the SABR is coming up to resistance. That was a nice move for a couple of days.
All right, thanks. Hey, McGraw, our $40 puts on C's are bid 10 cents. I'm going to bid 15 just to avoid 15 days of risk. Nice trade there. I doubt I'm going to get filled. All right, this coin is ripping. Wow, my puts are spready though, so I'm going to go. I'll bid 30 cents to take my money. All right, out of coin. Let me see what strike I gave. 49 puts. All right. I did the 45s.